how has the housing market been reacting according to Redfin? There has been recent news about the US debt ceiling crisis and how it impacts the housing market. Right now, we do have a tentative agreement. Hopefully soon we can have that passed and done away with. And on top of that, how are home prices reacting to everything happening in the news? And we have good news. Home prices have been continually lower than what it was last year over these past couple of months of most of 2023. So that's some good news. In today's video, I'm just going to drill into some graphs, show you all some charts, show you all how mortgage rates are reacting. Mortgage rates are over 7% for the average 30-year term, which is crazy. So it's back up to what it was late last year, but buyers are reacting a little bit differently than what they did last year. So we'll drill more into that. So before we go on, please be sure to like this video, subscribe. More than anything, subscribe to this channel so you all can see some more content around the economy, housing market, and personal finance as a whole. All right, so here, this Redfin article, first of all, they started stating that new listings of home sales dropping 24%, one of the biggest declines since May of 2020. And obviously that happened because of COVID, because of the pandemic. And we're seeing this decline happening right now. And so maybe we're going back to pre-pandemic levels with new listings. Well, not exactly going back to pre-pandemic levels, but going to pandemic levels at the start of pandemic levels. And so that's huge. Another thing is that mortgage rates are passing 7%. And in this article, they were just talking about how last year that scared a ton of buyers away. But because we have a supply issue where the inventory is not as high, we still have a decent amount of demand and a decent amount of home buyers not that scared of a 7% mortgage rate as they were last year. Because one, a lot of people believe that interest rates, mortgage rates are actually going to continue to rise. So having a 7% mortgage rate is probably better than having a 10% mortgage rate that may happen within the next year or so. Another thing is that people are now used to 6% mortgage rates. I think they've come back to reality and they got used to 6% now, right? In the beginning of January, there was a huge surge of home buyers coming into the market and people buying homes. And the rates weren't like super low. They weren't lower than 5%, right? They're 5.5%, 6%, around that range. And so now that mortgage rates are 7%, people are like, the norm is not actually 2%, right? The norm is actually maybe 5 or 6%. So it being 7, that's not a ton much higher than the average or how much it should be. And so that's keeping a lot of home buyers within the market. And then just reading different indicators happening on Redfin. So number one, the median home sale price was $375,000, so down 2.2%. If we look at this chart, let me go to this chart right here, go to medium sale price. You can see starting in towards the end of February, we've been lower than what we were last year for most of this year, I would say. And so that's a good thing. So starting at the end of February till right now. So we have March, April, May under our belt. So that's 3 months, maybe half of the year we were lower. Other months it was, it was around 1%. So I think cumulatively as a percentage year over year, we're probably lower compared to last year. So that's some good news. Another thing is that home sale prices declined in 29 metros. So the biggest drops are in Austin, Texas, Oakland, California, Las Vegas, San Francisco, and Sacramento. And then sale prices increase in Cincinnati, Milwaukee, Fort Lauderdale, Newark, New Jersey, and Columbus. So you see increases happening in the Midwest and in the South and actually in the Northeast, New Jersey. That's interesting. But you see declines happening also in some cities in the South, well, in Texas, and then the West Coast, 3 different cities in California, and then Las Vegas. Another thing is new listings of home sale fell 24.1%. That's crazy. One of the biggest declines since May. And we talked about that earlier. So let's drill into this chart right now. They have different charts right here just showing the different things that are happening in the market. So let's go to new listings first. So new listings is still below average. It's down 24.1% compared to last year. And you can even see the 2021 range where it was up this much, right? All of them were up. 2020, of course, had a steep decline because of the pandemic, and then it rose back up. Maybe we will rise back up just like 2020. I'm not 100%, only time will tell. And so that's interesting. And then home sold is still below average, down 20.5%. And we saw medium sale price already. Active listings. So active listings is extremely important because it's how many properties we have on the market. And so for most of this year, we've been above 2022 levels, right? And above 2021 levels. But we crossed that 2021 level recently in April, right? And it seems like we're about to go lower than actually 2022 levels. And so active listings actually started off decently, right? It was up 25% compared to last year. And then now it looks like it's going lower. It's going to be even lower than 2022. And that's not good because the more inventory we have, the better prices we have, right? And now that inventory is going down, we don't have as good of selection. We don't have as good of a competitive edge as it pertains to home prices. So home prices remain elevated. Hopefully this trend goes upward like it did for all these other years. Looking back at 2020 when the pandemic happened, these were actually decent levels. You see earlier 2020, our average active listings pre-pandemic were usually above 1 million. You see that right here. It was above 1 million. It was still above 1 million even when the pandemic hit. Yes, there was a dip, but it was still over 1 million active listings. And then when supply chain issues came, when people were just rushing to buy houses and things like that, it started to decline a lot. But this is our average, over 1 million. And currently we're sitting at 700,000. So we're down 30% compared to pre-pandemic levels. This is not good for home prices at all. All right, so percentage of the active listings with price drops, that's good. We're above last year. So there's more percentage of houses having their houses marked down. Still, home prices are still super elevated. So I don't know how much benefit that actually offers to people. All right, so right here you have like Redfin's cumulative data for the month, right? And so for the month of April, the median sale price nationally was $408,000. So last month in March, it was $400,000. So it's still increased, but compared to last year, it is a little bit lower. And so you see that increasing happening. And then you can see other markets where it increased a lot. Boston is increasing crazy, man. And then you see Seattle, LA, not as steep as Boston. And then you have Chicago, and then you have Philadelphia. Philadelphia looks like it's really flattening out, which is great. All right, the other thing that I want to mention that I did mention in another video is that this debt ceiling crisis and its impact on the housing market. Redfin did write an article about it. And so in this article, they talked about areas of real estate that's impacted by this debt ceiling crisis. One of those areas is high concentrations of federal employees, contractors, vendors, military personnel, right? Retirees, right? These are people that get paid directly from the government. So if the government default on their loans, they have to postpone paying these workers, right? And in these areas, if people don't have money to buy things, the economy slows down. You know, you're not going to the restaurant anymore. You can't pay your mortgage, right? Small businesses in those areas start to cut jobs on top of that. And so you have a ripple effect happening if this debt ceiling crisis doesn't get managed. And so this was a great article by Redfin, just another market update. And then they talked about mortgage rates, right? What happens during a debt ceiling crisis. So initially rates actually go up because these are risky investments for banks. And so they raise the interest rate, making sure they get their money back. However, if a debt ceiling crisis explodes and becomes worse, the Fed starts to lower interest rates, right? And that will in turn lower mortgage rates, which will hopefully bring people back on the market and increase demand and start to stir up the economy. Now here, this was before the government had a tentative plan, but they said if you're planning on buying a home this year, there's a chance that you might be able to get a better deal on a mortgage rate if and when the debt ceiling is breached. Right now, we do have a tentative agreement, so it doesn't seem like we're going to go into a default or the debt ceiling is going to be breached. And so I don't think mortgage rates are going to fall anytime soon, just to be honest. They're over 7%. They may hover and stay around between 6 and 7.5% for the next year. We'll just see, but there's more chances of it going higher than it going lower. So I wouldn't recommend home buyers to essentially time the market or wait for mortgage rates to go down anytime soon. I hope you all enjoyed this video of the housing market and Redfin's update and home prices and how the debt ceiling crisis affects the housing market. Make sure you all like, subscribe, and I'll talk to you all later.